What's good, Tesla family? It's Ray J back with another video. And in this one, we'll break down what's going on with Tesla stock and what you should be watching for moving forward. I'm also going to talk about what data is dropping tomorrow morning for the market, what the news is saying, and how all this news may affect Tesla, SPY, Nvda, the QQQ, and many tickers out there. But before I break anything down about all this information, I do have to mention a couple of things. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And finally, don't forget about the Webull link. The offer ends very soon. If you deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon. Check it out before they run out. With that out of the way, let's get on with the video. Anyways, when it comes to Tesla, this thing was up about 0.82% for the day, trying to hold up, but overall it was looking kind of weak compared to the market. But the question is, how will Tesla move and why did Tesla perform the way it did? The answer is Tesla got a very nice spike in the morning because of the CPI report that was better than expected. But then after that, we saw Tesla start to slow down as we had lots of negative news that came out that caused this thing to slowly decline. It still managed to close kind of green, but it's still not looking that strong from a technical standpoint. And for tomorrow, the way Tesla opens and the way it moves during the pre-market is going to be heavily determined by what news comes out in the morning and what the data is going to be looking like. But first, now let's talk about the CPI report just very, very briefly. I did talk about this in the morning, so if you want more information about this, you can watch my morning video once again. You can see right here, CPI was at 3%. That's lower than the expected 3.2%, right? So that was pretty good for the morning. Core CPI was 4.8%. That's lower than the 5% expected report. We got 4.8% for core year over year, which was good once again for the markets. Month over month, CPI was 0.2% up, which is actually lower than the forecast of 0.3%. And last but not least, the inflation rate month over month was only 0.2% overall, which was as expected. So all this data was as expected or much lower than expected for almost everything. That's a very, very good sign for the markets. Why is this good news? Because this de-incentivizes the Fed from being more restrictive. The Fed said that they're going to be looking at all this news, all this data before making another rate hike decision. And we're going to find out what happens over the next couple of weeks during the FOMC meeting. Many of the Fed speakers came like Kashkari. They ended up being kind of in the middle, talking about how they were still going to look at more data and how there is progress being made. They did address this, and this was good for the market. This is why the market was looking very optimistic, holding up quite nicely for most tickers out there. But then the question is, what about for tomorrow? What's going on with tomorrow? Let me just remind you guys that at 5:30 a.m. Pacific time, so that's like in my time, or for people on the East Coast at 8:30 a.m. for New York time, we have more data dropping 1 hour before the stock market opens here in the US, depending on where you are around the world. What data is coming out? It's the PPI report. This is once again going to be very significant. This is like CPI except from the producer side. Month over month, we want PPI inflation to be at 0.1%. Okay, we want this to be a very, very small increase. We want it to be there or lower than expected. Then we have core PPI dropping. We want this to be around 0.1%. PPI year over year, we want this to be around 0.4% or lower than that. And then core PPI year over year, we want this to be around 2.6%. So core PPI is going to be one of the most important ones to look at. The Fed has been talking about this. This is very important because this tends to be a good determiner of what CPI is going to look like in the future. The Fed's going to look at core PPI. It's going to be very important. It's coming out 1 hour before the market opens. Be ready for that. It's going to affect how the market moves. And then we have something else coming out. That's initial jobless claims. The jobs numbers are coming out again tomorrow, 1 hour before the market opens. The market is going to react to this. So we're just going to have to wait and see what happens, honestly. We want this to be above 241,000 initial jobless claims. We want more unemployment for the stock market. I personally don't want that to happen as a human being who has a lot of empathy and sympathy for so many people out there, but I don't necessarily have to look at this from my own perspective. I have to look at this from the market's perspective. The market wants higher unemployment because more unemployment will slow down, aggregates demand, slow down demand in the economy, which is going to lead to less spending. And less spending is going to slow down inflation. We're already starting to see signs of it as unemployment started to go up a bit since the last reports over the last couple of quarters. So this is looking pretty decent. We want this number to be hot. Okay, so we want high unemployment, high initial jobless claims, and low inflationary numbers for the market to hold up. If something is off tomorrow, if we get a lot of new jobs added, the market may react negatively. So please be ready for this. It's going to be very important. We also have one more Fed speaker, Waller, speaking for tomorrow, but that's about it for tomorrow. Now, for earnings, don't forget we have Delta coming out for Thursday. We have PepsiCo, Progressive, and just a couple of others. And then for Friday, we have JP Morgan Chase, we have Citigroup, Wells Fargo, and also BlackRock reporting earnings for Friday. This is going to be very big for Friday. Be on the lookout for all of this data, all of these earnings. This is going to affect the market big time for Friday. Until then, the market's going to react to PPI and the other data. Now, as far as Tesla goes, looking at the new model listings, we're starting to see the models listings going up again. Production could be playing a role in this, but we are starting to see signals of demand slowing down a bit for Tesla, especially in like China and other places like that. Could this be affecting the current levels right now? It is a possibility, but like I said before, I would just be patient with this when it comes to how it's going to affect the overall quarter since there's so much time left. But it is a little concerning to see the Model X listing starting to go up. Now, the reason why Tesla was a little bit slow today is because all of this news came out that tended to be a little bit more bearish for Tesla. I already talked about most of this, but I'm just going to briefly talk about this. Basically, Tesla has announced that there are warnings about how it's likely going to be qualifying for less tax credits on its EVs for next year. That's very important. It's going to affect the way people buy into these cars, how many they end up buying, and it could even lead to more urgency for people to buy them like this year. So just be very ready for this. This is going to be happening to all Model Ys that have been eligible, but all Model 3s except for the base version are once again going to be impacted by this. So please be ready for this. It's very important news. And there's also news that came out about how the Tesla stock and the Tesla company has been impacted by this as well. The news is talking about how Tesla's unintended acceleration investigation has been reopened by the NHTSA after lots of allegations. Honestly, guys, I already talked about this just a couple of hours ago, so if you want to see more about this, you can look at my second to last video. But basically, this is very important, and this has led to more concerns for Tesla. This is another reason why we may have seen Tesla slow down just a little bit today, because this investigation is going on, because many people are expecting that Tesla's current electrical currents are just very inefficient. They're leading to some power issues and just other issues like that. They're also mentioning that Tesla has some acceleration issues and many different things out there that were outside of Tesla's diagnostic system report. So this is very important. If the NHTSA finds something that's going to be very big for Tesla, if not, it could just be something that just passes by. But remember, this is not a guarantee. None of these allegations are guaranteed. It is simply just under the investigation of the NHTSA. There's a big difference there. Don't fall for anything that the media is trying to scare you with. It's just worth noting. That's why Tesla slowed down a little bit. We also saw an increase in the short interest. We saw about 41 million Tesla shares shorted again. It's important to note we're seeing more shorts piling in, and that's part of why Tesla's underperforming. We're also seeing a lot of dark volume on Tesla. It went up again by about 67.5%. This is typically should be around the 50% range, maybe even under that. So it's starting to go up again. And then on top of this, looking at the data, Tesla's price-price ratio is starting to curl down, which is giving Tesla some relative weakness. This is why Tesla's slowing down as well. And besides that, looking at some data, Tesla tends to be kind of slow for Thursdays. We're only green about 47% of the time, maybe 48% of the time. So it's just worth noting. I'm not too concerned about seasonality data like this, because Tesla is going to be reacting to initial jobless claims and that stuff. Volume is kind of weak on Tesla. We're not getting a whole lot of those aggressive buyers just yet, but I believe volume is going to start going up next week, because it's going to be the final week before earnings comes out, which is going to be in less than a week from now, or exactly 1 week from now. So please be ready for this. Earnings is going to be coming soon for Tesla, so we're going to see a big shift in the share price approaching it. But until then, and as of right now, Tesla is looking a little bit weak in my opinion. Now, I can't promise anything. Let me just note that the data is going to affect how Tesla opens tomorrow. If we get some good data, which means low inflationary numbers and high unemployment numbers, right, that suggest that, we're going to see Tesla probably get another open very close to 275 or so, and then could react later on. I will report this tomorrow morning. However, if Tesla and the whole market end up getting some bad numbers, let's just say that PPI is high, or maybe it's not high, maybe PPI is okay, but then the jobs numbers are bad, right? Let's just say that happens hypothetically. Then we're going to see Tesla slow down in the morning. The whole market's going to slow down. We're likely going to see Tesla come all the way down to this 270 area and fill this imbalance. There was actually an imbalance down here, like around this 270 zone, like 271 area. And if that fails us, there's this gap all the way down to like 269. And I think Tesla will come down to about like 268 or so if it does end up sinking. All right. So there's both the bull and bear case. Okay. Always be open to anything because the data is very capricious. It's unpredictable. It could be very ambiguous too simultaneously. But what do I think is more likely? From a technical standpoint, just based off the trend, based off how Tesla's looking, it is looking a little bit weak. If you look at how it moved today compared to the market, it was actually very slow. Let me just close these drawings. Sorry about that. It was looking a little bit weak. We're about to get a 4-hour cross on the PPO right here, but like I said before, it just wasn't really, performing that great. So I'm going to be very much in the middle with Tesla. I think it could go either way, but it does look like it might get a retest of like 269 to 270 before trying to bounce off this 4-hour 50 EMA. But like I said before, I mean, even though it is looking a little bit more bearish, I would just be very, very unbiased and see how it reacts tomorrow morning. All right, that's the best thing to do. But just remember, it was looking kind of weak today and this could translate into tomorrow. For SPY, good data tomorrow, right? Remember what good data is, right? Low inflation and high unemployment numbers. Good data is referring to that. That's going to help bring SPY to 447.5 around there. If it breaks it, 448.72 could come. If the opposite happens and it gets like bad data, which would mean high inflation or just like really bad jobs numbers, which are suggesting that the jobs market is still too strong, which is not what the Fed wants. If that happens, we're going to see SPY come all the way down to about 445 or lower and then retest 444. If 444 breaks, there's an increased probability of it trying to come down to fill this gap. We're getting very close to at least gap support, very close to the 442s. So we're going to be watching support very carefully just to be safe. Right now, the market was forming this wedge right here. So you could just, broadly draw this out, kind of like a wedge. It's getting very tight, just like this. This is what tends to happen when the market becomes indecisive, especially when we approach these big data days. So we got a nice pop, but now the market is losing some momentum and volume. And now the market is just going to be reacting to the data for tomorrow. And then the earnings season, which is going to be kicking off by the banks on Friday. The real earnings start. So be ready for this. The market's getting kind of tight and indecisive, and we're going to see a very big move depending on how the data looks tomorrow. I will talk about that for tomorrow. What I will say is that for now, SPY is starting to make lower highs. You could argue that it's getting kind of tight. So there's a chance it may sell off a little bit tomorrow, but just to be safe, like I said, I like to be very, very open-minded to anything just to be safe. Now for Apple, if we get bullish data, you're going to be watching this thing push up to about 190. Breakdown, we're going to be watching 191.7. If we get bad data, it's going to break down to 188.5 and potentially 187.5. What do I think is more likely? Well, the current trend is just very sideways. We're not really getting a clear direction on Apple. It could go either way, honestly. But my gut's telling me that looking at today, we spent a large chunk of today kind of like selling off a bit after getting these initial pumps. There's a chance it may cool off a bit to at least 188.5. I'm leaning more in that direction, but just to be safe, watch the data for confirmation. Mullen's getting some activity in the after hours. Very interesting. I think there was a new deal that came out. I saw something about this just a few minutes ago. Anyways, it's not really that relevant. It may make a big move for tomorrow, but I'm not too worried about that. For the QQQ, this thing is also getting tighter right now, just like how SPY is, but it's actually holding up above its support a little bit better because this was very close to where our resistance was, where the inverse head and shoulders was forming. We also had this cup and handle information on the triple Q. If we're bullish tomorrow and we get good data, we're going to be watching this thing push for about 375. If we get bad data and this thing gets a rug pull, it's going to come all the way down to about 370. If that fails us, it's going to come all the way down to about 368 or so. 368 to 369 between there because we have this imbalance down here. So I'm in the middle. We're going to see which direction it picks depending on the data. It's very tight right now, but my gut tells me this is what my prediction would be. So you are always going to be prepared for anything because the market could be unpredictable, right? Always remember that. But what I would predict is maybe this thing pops a little one more time. We get one more pop when the data comes out in the pre-market. Maybe it makes its way up to like 374 to 375. Then we get a rejection. This thing starts slowing down as time goes on, just like how it did today, and just trades sideways again and maybe close a little bit. It closes a little bit red tomorrow. That's what I would be predicting. But just to be safe, like I said, just be open-minded. That's just my prediction. For Nvda, on the 5-minute time frame, it formed a bearish divergence. It kind of sold off a tiny bit in the pre-market, but there's a chance it may gap down tomorrow because of this. However, it's going to depend heavily on the data, of course, right? Because we also had this inverse head and shoulders formation that formed very nicely. Could this thing be forming like a big cup and handle? If that's the case, then we could see some downside. There's also this negative divergence that has developed, but there's no guarantee it's playing out just yet. If you're bullish and we get bullish data tomorrow and Nvidia does pump, we're going to be watching 445. If we get bad data, Nvidia is going to be impacted by it. We're going to be watching 435. In my opinion, the odds do favor this selling off just a bit, looking at the negative divergence, but just to be safe, watch for confirmation in the direction. For Microsoft, if you're bullish, you're going to be watching 340. If you're bearish, you're going to be watching this thing come all the way down to 330, if not 327. What is it looking like? It looks like this thing is trying to curl and try to hold up. There's not really a clear direction, so really it just depends on the data at this point. It was very sideways for the majority of the day, getting very tight. So we're going to be watching to see what happens. We also have earnings in a couple of weeks. That's going to be very important. AMD is still holding up quite nicely. It actually held up very, very nicely. It looks like it's going to try to retest this like resistance zone. A nice push-up could take this thing to 116, then potentially 118 if we get a big pop. If it comes down, watch 113, then 111.75 and these supports as well. Where am I leaning towards? I'm kind of in the middle with AMD, but I'm leaning a little bit more bullish from this technical standpoint. If you look at the 4-hour, we got a very nice cross. It looks more strong from a technical standpoint. The odds favor it may be cooling off temporarily, but eventually pushing up for like 118. Because that's what it looks like on the bigger time frames. It looks like there's like a cup and handle or even like a nice accumulation for this imbalance to get to like 118. I think the odds favor that. It still looks more bullish for the medium term. For the short term, it could be shaken by tomorrow first before it does make a nice recovery, or it might just straight up push up to 118. It's got to be one of those two. It either drops then pumps, or it just continues pumping. It looks more likely it's going to do that. For Netflix, if you're bullish, you're going to be watching this thing make its way up to about 447 to 450. If you're bearish, you're going to be watching 440, then 437. Right now, it's very sideways, not really doing too much, anything too significant, but it looks like we have a nice accumulation right here, so it might make its way up to about 447 at the very least, and then reject off that. I'm going to be watching that for tomorrow, but watch for both sides just to be safe. For the NASDAQ, it's going to break 14,000 if it's very bullish tomorrow, but it is looking indecisive right now, looking at this doji that formed on the 4-hour time frame. If it rejects and starts breaking down, you'll be watching support at the 5 EMA at 13,830. If that breaks, it's going to fill the gap down. I'm in the middle with this. It looks very indecisive for now, so just wait and see on that. Same thing with SPX. I mean, it is looking a little bit weaker. I would say that looking at this 4-hour candle and this gap down here, if it breaks below 44.51, it's going to come all the way down to fill the gap around the lower 4400s. If we're bullish, it's going to break 40, basically make its way up to 4,500 plus. That's going to be like the more bullish case. Where am I leaning towards? Well, the thing is, you have big bank earnings coming out, so I'm not really too inclined in either direction. I don't really know how the big bank earnings are going to look. So that's one of the things that's unknown about the market. Like when you don't know a lot of things, it's best to just manage risks and be very careful. And it's very risky to trade a lot of earnings sometimes. So be very careful. Sometimes you could do it, but you have to be willing to take the risks and know what you're getting yourself into. But for now, it looks to me like this thing's looking a little bit weaker. It looks like it's kind of sideways and indecisive. It might start to cool off just a tiny bit. But just to be safe, we're going to be watching the data just to see which direction it picks off of that. Now, what is good for the markets, though, is the dollar has this nice inverse cup and handle that ended up playing out. I don't know if it's showing right here. Actually, it was showing like right here, basically, this inverse cup and handle. And now it's coming down and breaking down to about this 100 area. So it's getting very close to support. There's no sign of it bouncing, so it's not really giving us enough keys about what the market's going to do, but it is suggesting that there could be more upside for the markets. Coinbase looks a little bit more bearish from a technical standpoint, but just to be safe, it's going to react to the data. Good data is going to bring this thing back above 90. Bad data is going to take it down to 80. Where am I leaning towards? Well, we have this imbalance down here around 80. If it does continue to sell off, it's going to likely make its way down to 80, but just to be safe, watch for data for confirmation. Alibaba reached our target. I was talking about this thing reaching at least 94.88. We actually reached that. However, it formed a bearish divergence, and if it does truly reject, if it breaks below the 5 EMA, you're going to be watching it come all the way back down to 90 and start rejecting here. There's a good chance it's going to reject looking at the bearish divergence, but if it manages to break above 95, it could push for like 97.5. I think there's a bull and bear case, but I'm leaning a little bit more bearish looking at this bearish divergence. I think there's a chance it may sell off, but just to be safe, always watch the data and be open-minded. For Google, we have a very, very nice looking accumulation structure that developed right over here. A nice bullish triangle as well. There's a chance it could be forming a nice cup as well. And if it gets above the 50 EMA for this 120 area, we're going to likely see this thing push all the way up to 121.75. If we get a rug pull, if something bad happens with the data, it's going to come all the way back down to 117 and potentially 115.8. From a technical standpoint, it looks more bullish. It looks like it's going to try to hold up. It looks like it's going to try to make its way up above 120, but just to be safe, we're going to be watching for tomorrow for more confirmation. But it looks more bullish from a technical standpoint at the time I'm recording this. For Amazon, now, if you're bullish on Amazon, you want to see this thing retest like 132 around there and try to break out. If you're bearish, you're going to be watching 128.99 to be retested. Where am I leaning towards? This is very sideways, not really giving us a key direction, but there's a chance it may reject off this like 131.8 area around the 131s. It keeps doing that, so there's a chance it could happen. But in order for us to invalidate this trend, we have to break and hold above 132. If it does so, this thing could break out. What do I think is more likely? Well, it seems like it might just trade sideways from here because it's been stuck in this range for quite a while for the last like couple of weeks. So you can see like I have the chart back just a couple of weeks since like the June period. It's been going back and forth for quite a while. So we'll just have to wait and see which way it goes at this point. So we're going to see how the data affects it. I mean, there is a chance it may reject off this 131 zone and come right back down to the 128s, just like it has been doing for the last couple of weeks. But just to be safe, watch for confirmation. Now, Meta, if you're bullish, you want to see this thing break all the way up above like 310. If you're bearish, you want to see this thing come all the way down back to 300 or so. Where am I leaning towards? I'm more bearish. I'm leaning more bearish on Meta because we have a clear negative divergence that developed. It did fail to break above like 310. This divergence looks very strong, and I think it pumped way too much. It is due for a slight pullback. We have a very strong looking divergence on it. I think the odds favor it coming down to about this like 300 level. There's also a gap at like 298. I think it's going to cool off by a couple of dollars at the very least before it continues going higher. Now that's my short-term prediction for Meta. Maybe it cools off a little bit, but for the medium term, for the next few weeks, I think Meta is going to push for 320. That's where the unfilled gap happens to be. I don't know if it's going to show right here, but it basically has a giant gap that's unfilled, and it's going to take it up to like 320 if it does fill it. I think it might reject for the short term, come down to like 300, maybe 298. But just to be safe, we're going to be watching like 305, just to be like very, very safe, a $5 drop or something like that. I think it's going to cool off a bit and then bounce later on. That's what my prediction is for Meta. All right, guys, so I went over the majority of the targets. I did give you guys some predictions for most of these, but not everything, because I can't really tell the directions on everything just yet, to be ever so honest with everyone. For now, Tesla has this nice looking structure. You could argue it's trying to like accumulate and form a cup and handle. I mean, it's a possibility. But for now, the problem with Tesla is it was looking weak today specifically. It was looking weak compared to the market, to be honest with you, on the shorter time frames. I think it's going to curl up when we approach earnings next week. But we have a couple of days left, and for now, Tesla's going to react to some big data. So watch the data and see how it affects Tesla. We'll see if Tesla does get another pop and then it starts cooling off as the day goes on. That seems most likely what's going to happen. It pops in the morning, then it cools off, and etc. But to be safe, that's also going to depend on the data. So we'll see what the data tells us. And until then, watch support and resistance and do what you have to do. All right. Thank you all so much for listening. Have an absolutely incredible rest of the day. Tesla in the market to the moon as the long term is still incredibly bright. And peace out.